to potentially risky activities now?
Yeah, so that's a good example of what we did in the public markets, and the answer to how you manage the risk is you have a very deep, experienced team that can do the due diligence and do the work, put the work in to get to the right answer on those positions. I think the other area we're focused on is in the private credit space, and I think people need to be prepared for some accidents ahead in private credit. I want to be clear that I think it also may be one of the great investment opportunities over the next decade if you approach it in the right conservative way, but we are going to see some major accidents ahead in private credit, in our view. The main reason for that is that 96% of private credit firms were actually started post-global financial crisis in an environment of low to zero rates. That's a very easy backdrop to operate against. You said at the outset of this interview, I've only been here 10 weeks. I can tell you an actual warm blanket that I am wrapping myself in is that our private credit team, led by the incredible Rick Miller, has been at this since the early 2000s. We're one of the very few managers that have been through 3 recessions in the private credit space. And I would say to everybody watching this, what you want to ask your managers, what you really want to focus on, are you in a covenant-heavy portfolio? Because when things go sideways, covenants give you the ability to be at the table, very important. Has there been a lot of diligence on the asset? We've had 5 years where diligent light became a term. That's not going to be fun over the next 5 years if you arrived at it from that perspective. And then just a third observation I want to give you that I don't think a lot of people are focused on is that you and I remember that last year people were surprised that credit and equity went down together. We haven't yet in the public markets. We haven't yet experienced that in the private markets, but I want to suggest to people that we may see some correlation between private equity and private credit, because so much of this market in private credit has been taking the credit of big scaled private equity sponsors, and there is going to be correlation to those assets. So you also want to make sure your manager is good at origination and that they're not just dependent on these large private equity sponsors for putting the portfolio together.